Well, it's finally happening. and This could be a great time and a great opportunity for many people to really take advantage of a huge upside in a situation of which investments, return on investments, and money making opportunities are going to be presenting themselves. Now, we've got a variety of different topics that we can discuss here as far as the future of money and the central bank digital currency and CBDC, as well as cryptocurrency, the future of XRP and Ripple Labs and the SEC court case. But in this particular video, I want to focus on one of the main areas or segments or niche groups within my diverse portfolio that I'm looking to utilize and leverage as a way of increasing my earnings, increasing my net worth, and developing passive income streams. Folks, I want to talk about real estate. And more importantly, I want to talk about what Warren Buffett once said: be fearful when, I'm sorry, we shouldn't be fearful, but instead be greedy when others are fearful. Now, according to the Motley Fool, 270,000 recent homeowners are already underwater on their mortgages, which then asks the question, should you be worried? Well, the short answer is maybe. If you are one of these 270,000 homeowners that are underwater, maybe. But if not, then obviously you probably shouldn't be too worried. But let me explain. For instance, if you are one of these 270,000 homeowners or recent homeowners who are already underwater on their mortgages, that just means that you bought at the top of the market and potentially overpaid for the property and the real estate that you own, or at least are working towards owning. However, this doesn't really matter. Allow me to explain. It only matters. Let me just break it down to you like this. You make money theoretically in real estate when you buy, but you really only make money when you sell. The theory, the logic behind this is buying at the right price, which locks you in for appreciation, profit. However, time, again, as we've discussed before, timing the market versus time in the market is always on your side. And I would side with the opinion of experts and agree that real estate over time historically is going to appreciate in value. Therefore, I really wouldn't be worried if I'm upside down today, especially if I'm not considering selling my real estate, which is a huge part of this video because I don't want to sell real estate. I want to buy real estate. Now, on the flip side, overall, should we be worried about 270,000 recent homeowners being underwater and what that means for our economy? I don't know if I'd be worried, but I would definitely be aware. Now, it says here, key points. Putting little money down when you buy a home can have consequences. And some of these folks could be underwater for the simple fact that they put as little money down as possible. Additionally, more than 250,000 homeowners can't sell their homes for a high enough price to pay off their mortgages, which is just a mathematical fact. But how many homeowners really want to sell their homes right now is the question. And also, when buying a home, try to save up enough to make a 20% down payment, which would circle back to the first key point of putting too little money down. 20% down would theoretically put you in a great position to have equity in the home in relation to the balance due or the principal balance due on the mortgage, the outstanding mortgage, and what the home is valued at, appraised at, and or worth, while also eliminating PMI, which would also reduce the monthly payment on this property. But again, much like the home price appraising, seeing comps lower than what you owe, It really doesn't matter if you're not looking to sell. Much like if you were to see a rapid rise, as many saw throughout 2020, 2021, with home values going to the moon, if you weren't interested or willing to sell, it really didn't matter. You couldn't realize these changes in the markets because you weren't looking to capitalize on the changes in the markets. However, perhaps maybe you use this opportunity to pull out equity from the home in the form of a line of credit or a loan based on the higher values, but now we're just splitting hairs and going down a completely different path. I'm going to read to you what it says, that home buyers faced a big challenge going into 2022. Low inventory meant that home prices were apt to be elevated on a national scale, and sure enough, many buyers paid more for a home this year than they would have to pay in the past. Certain markets, certain hyperlocal markets in the country are still seeing really, really good sales numbers. And yeah, you may be paying a premium based on, more than likely, the main factor being location. Location, location, location. But higher home prices can make it difficult to come up with a sizable down payment. Therefore, many buyers took advantage of loan programs that make it possible to purchase a home with little or even no money down, like FHA loans and VA loans. And folks, I would not necessarily try to buy a home that I couldn't afford. Just putting it out there. Now, the problem, though, is that many people in that position are now already underwater on their mortgages, and that's a fate prospective buyers. That's a fate prospective buyers should make every effort to avoid. Sound advice from the Motley Fool. But a really big problem under this heading states being underwater on your mortgage means your home loan balance is greater than your home's market value. Or, to put it another way, if you need to sell your home and get out, your home wouldn't command a high enough price to pay off your mortgage in full. And many people grew familiar with the term underwater during the 2008 housing crisis. Back then, mortgage lenders weren't as strict as they are today. So a lot of people who couldn't afford to purchase homes did so anyway, fell behind on their payments, and then couldn't sell their homes for a high enough price to make their lenders whole. Meanwhile, an estimated 270,000 homeowners who purchased a home in 2022 are already underwater on their mortgages, according to reports from data firm Black Knight. Not BlackRock or Blackstone, but Black Knight. That represents roughly 8% of home purchases financed with a mortgage this year. Not surprisingly, borrowers with FHA and VA loans are those most likely to be underwater on their mortgages already. FHA loans make it possible to purchase a home with 3.5% down, and VA loans don't require a down payment at all, though they are available to a more limited pool of buyers, i.e., military members, veterans, and their spouses. Home prices peaked in June, which, again, should recent homeowners be worried? Well, June of this year, home prices peaked, so those who purchased a home around then may now be looking at lower property values than they were at the time their mortgages were signed. And that's not necessarily problematic for those who took out a conventional mortgage and made a 20% down payment, because homeowners in that boat still have a long way to go before they're looking at negative equity. Rather, it's buyers who didn't put a lot of money down at closing who need to be more concerned. And if their financial situation changes, then these buyers might struggle to get out of their current housing situations. This could potentially be a big problem, especially for those who may experience relocation through a job. But we can get into that just a little bit on how to potentially avoid that problem. New buyers should proceed with caution, according to the Motley Fool, and it can be tempting to take out a mortgage with just a minimum down payment. But the danger in doing so is starting off with very little equity, so that if home prices fall soon after, the risk of ending up underwater on a mortgage rises. And in today's market, coming up with a 20% down payment can be tricky given how expensive homes have gotten. For instance, a $100,000 home, which I'm not really sure where you would find one of those, at 20% down would be 20 grand. But a $500,000 home at 20% down would be 100 grand. See where I'm going with this? But if you're a prospective buyer, you should at least make an effort to put down 10% to avoid winding up in a bad situation. Sound advice. Now, this mortgage lender received the highest customer satisfaction score for mortgage origination in 2022, according to Motley Fool. And their alert states that looking for a no-frills mortgage loan process points to Rocket Mortgage as being a pioneer in online mortgage application technology, and their home buying app is a standout amongst mortgage lenders. Again, folks, a lot of what we have done and are doing and will be doing in the future are moving online, and I wouldn't be surprised if Rocket Mortgage moves to a point of which their underwriting process is then processed by OpenAI, ChatGPT, and other automation service systems as a service. But let's talk about this real estate and where this is putting potential buyers and sellers and avoiding being underwater, and more importantly, having access to the ability of gaining the funds required and necessary to put down 20% and be able to afford the property overall. So let's address the elephant in the room. I'm looking forward to acquiring real estate in addition to stocks, investing in stocks, and investing in businesses, as these three pillars are going to be, in my opinion, amongst the three strongest to produce returns on my investments, similar to those of some of the richest people in America or the world even: Warren Buffett, Jeff Bezos, Elon Musk, Bill Gates. These folks have money. And historically, this money is made through business and then grown even further with returns on investments and passive income streams from investing in stocks and real estate, as well as some other alternative investments that we can get into another video. If you guys want to know, just drop a comment down below. But I'm looking to invest in real estate, and I'm looking to invest in real estate from the position of allowing renters the ability to apply for a lease and rent without having to jump through the hoops of putting 20% down or potentially being upside down in a mortgage that they are afraid that they can't afford or may have to sell and move on from before they're able to get to a positive equity position. With that being said, anyone who's in that boat who may be forced to relocate at a time of which they are experiencing a negative equity situation could potentially look to the same opportunity of putting the house for rent and moving on from there. Now, there's going to be a variety of different factors that come into play: property management, and then your next step as far as being approved for the next home, mortgage, or lease, depending on what you want to do. But right now, I think that I would probably be holding off until I can find the best deal and not looking to pay top dollar at the tippity top of the market moving forward after having just gotten out of that situation prior to in this hypothetical scenario. So that just tells me that moving forward, we're going to see probably an influx of extremely qualified renters, which would make it a great opportunity for landlords. Now, I'm not worried about renters not paying their rent because I'm going to do my due diligence and I'm going to make sure I evaluate every application as best possible to make sure I make the right choice in the tenant that I allow to rent the home. But I could also look to utilize this space for short-term rentals: Airbnb, VRBO, Vacasa, the list goes on and on. But how do you do that? Because these homes are expensive. Down payments are not cheap. And we are at the breaking point of a possible recession, possible depression, depending on who you ask, and higher prices, inflation. Money is tight. Well, folks, simple fact of the matter is you got to make more money. You got to make more money. You got to spend less than you make. You got to make sure you're not carrying high interest revolving debt, unnecessary wastes of money every month on interest. And then you're going to want to make sure you have a strong, solid budget moving on to saving money and investing. Saving money is cool. Saving money is great. An emergency fund, no problem, no qualms with that whatsoever. However, saving money doesn't make you money. I want to invest, and I want my investments to bring back returns. I want my money to go out into the world and bring back more money with it. Not necessarily utilizing my time to do it, but utilizing the money. So there's a variety of ways that this can be accomplished, but since you're watching this video, one of the best ways that I'm able to do it is through content creation in YouTube. Again, folks, if you're interested in learning or developing your channels or your social media streams or just getting started as a beginner, then by all means, feel free, click the link below, join the network. I'd be happy to help you guys achieve your goals and accomplish moving towards the possibility of making more money, having the funds available for a 20% down payment on a $500,000, $600,000, $700,000 home, being able to purchase a home and afford it, or even getting to the point of which you can have multiple homes and multiple properties generating cash flow. These would become cash flow producing assets, which goes back to what I've been telling you guys about as far as diversity, security, and cash flow. And moving forward, given the current situation and the current economic climate that we're in, I want to make sure that I have as many passive and diverse income streams coming in as possible while building my net worth, building my savings, building my investments, building my portfolio, building out my diversity, finding more and more ways to secure this and secure the ability to continue on and build out the sustainable business model that would allow me to further do more with less time. Because if you're looking at the situation from a time perspective of trading time for money, time for dollars, then odds are you're probably going to be more susceptible to the challenges that we will face given the state of the economy, given inflation, given the direction that things are going. If you haven't watched one of my previous videos about a banking insider and what I shared moving forward, you might want to go check that one out as far as what indications are being made about pricing and how businesses are going to market and what they're planning to do with their profit margins. Spoiler alert, they're going up. Therefore, if profit margins are going up, so are prices. So at the end of the day, we have to look at it from the standpoint of I need to A, make more money, B, spend less money. As we continue on this 5-step process of financial freedom, moving towards investing. Investing and having strong returns on investments in a great diverse investment portfolio is, in my opinion, going to be one of the best ways to hedge against inflation and secure yourself financially for whatever challenges may present themselves in the next few days, few weeks, few months, or even few years, and setting yourself up for the ability to retire. And not retire on a limited and finite amount of funds that you have to calculate, and hopefully you don't deplete before your expiration of time on this earth, but more so a retirement that you live where you're able to actually earn money and not deplete savings and continue to grow and build your investment portfolio. That's going to be key. However, with that being said, investing in stocks, investing in real estate, investing in businesses is just kind of just a proven method of being able to build wealth. Like I said, Warren Buffett, Jeff Bezos, Elon Musk, Bill Gates. I'm talking about some of the wealthiest people in the world and how they've accomplished this, and then use the money that they've earned from these accomplishments to spread out and diversify in ways in which they can produce greater returns and passive income to further build out their portfolio and continuously add and grow to what they have. Some of which started with very, very little, very, very humble, meager beginnings. And I just want to say that even though you're watching this video now in 2023 or whatever year you're watching this video, depending on how long this stays on the platform, I would never say that it's too late to get started. But I will say that the sooner you start, the sooner you'll be likely to achieve success and start to see some of these things working and returns and the fruits of your labor. So just want to put that out there and put it out there that I'm available if anybody wants to have a conversation or chat about it. Free links in the description. Check them out. You guys take care. Be safe. I'll see you real soon.